Bitcoin has been trading within a very tight range, but the recent options expiry gives us insight into what's coming in January. So let's break it down. Hi everyone, I'm Paul with ArcisFX. Now, Bitcoin has been in a super tight range essentially since the 13th of December. You can see by this slightly lighter grey box here. And the range has been between around 90, 89k and 84.5k, with 84.5k currently acting as local support for the price action, represented quite nicely by this fib level here. But also prior to that, Bitcoin was still in a relatively tight range following the bounce at the back end of this markdown phase. And since then, the range hasn't even been much wider than it has been recently. You know, prior to the middle of December, trading just between 94 and 85k. So it's been very muted price action for most of December. Most people have been attributing that to typical low volume behavior associated with the festive period. But there's more actually going on. So let's jump in. So the first thing to understand is that on December the 26th, there was a huge options expiry. In fact, it was one of the biggest, if not the largest expiry ever. And traders, as a result, were quite cautious in the run-up, with many large traders and institutions being very wary of this big options expiry because sudden swings could force them to hedge or cause losses. So the whole market has been very cautious, keen to avoid any unnecessary volatility, which could put them in a challenging position before those options expired, which of course has led to this very narrow range of price movement. Now, another factor is also something called max pain. Now, for this expiry, the max pain level was around 90k. That's the price where most options contracts, both calls and puts, would expire worthless. So markets tend to gravitate towards this level. As you can see, the price action has been doing that throughout December to minimize losses. So between cautious positioning and the 90k max pain, Bitcoin has stayed very much range bound in the weeks leading up to this expiry. Now, the interesting thing is when the expiry finally happened, instead of massive volatility, with Bitcoin potentially putting in wild price swings like this, the market actually remained very calm. As you can see now, as we're approaching the end of the year, there has been no increase in volatility. So one interpretation of this is that traders did not close their positions on the 26th of December. They instead rolled them into January or potentially March 2026. By maintaining exposure like this, they effectively anchored the price, smoothing out some of these moves, meaning we didn't have any explosive kind of price action on the 26th of December or following it. So what does this mean for January then? Well, volatility could pick up for several reasons. Firstly, with so many positions now concentrated in January contracts, the market could react quite sharply as it approaches certain price levels. So that would mean essentially anything outside of our current trading range. Secondly, liquidity will be slightly lower in some ranges because December's expiry would have drained some of these resting orders. So more moderate sized trades could move the market more than usual. And thirdly and finally, of course, the start of the year is when institutions will reassess their positions, rebalance portfolios, and implement new strategies, all of which can amplify price swings. So on the back of the holiday season, we could see an extra volatile January compared to the price action we've seen in December, which is quite an exciting prospect. But the question is, of course, what direction will Bitcoin go? Well, as far as the data is concerned, we don't have a clear definitive answer. Prices could move up or down depending on how these concentrated positions react, or based off any early January news we get or data, etc. So the takeaway is quite simple. Bitcoin's calm in December was largely driven by traders targeting the 90k max pain level and avoiding risk ahead of the options expiry on the 26th of December. But the roll of those contracts into January potentially sets the stage for much bigger swings in the coming weeks. So what we can expect with quite a lot of certainty is lots of more volatility outside of this current trading range, and the market could move quite sharply, but the direction isn't clear yet. Because here's the thing, a lot of the price action at TA which we're seeing in December, as we've already described, isn't particularly helpful in assessing where the market is going to be going, because of course it's been based around preparing for the options expiry as opposed to telegraphing the next potential move for Bitcoin. So the first couple of weeks of January are going to be very telling and are definitely going to set the stage for the direction Bitcoin is going to take in the coming months. So make sure you subscribe so we can keep you up to date. But it looks like January is going to be a very exciting month for Bitcoin. But whether the bears or the bulls have the narrative remains to be seen.
Hi there, I'm James. I'm the founder of ArcisFX. I'd like to personally invite you to join our 24/7 trading group. This is built for traders who want an edge. Inside, you'll get access to live calls on Forex, commodities, crypto, energies, and metals, along with exclusive daily analysis designed to unlock your trading potential. And this in both traditional and now in digital markets. I'm talking Bitcoin, crypto, altcoins, and tethered currencies. You'll gain early access to insider news, real-time updates, real-time support, and premium educational content. If you want to sharpen your skills and boost your success rate, then join me and Paul in this community. This is a fast-growing community of traders who are now writing their own success stories. So don't wait. Join up now. Your edge starts right here.
But let's now check in with key levels to watch this week. This is Bitcoin 2-hour chart, and the price action is stuck in this symmetrical triangle, which typically Bitcoin just uses to throw us all off. So if you do see these minor little breaks in either direction, I would urge you not to consider them as tradable events until you see something more significant, like a strong break like this, or a strong break like this on the inverse. But we have local support below the price action at 84,500, with major support remaining between 81 and 82k, with 81k also acting, of course, as an invalidation for any bullish continuation here. You can see this is the bounce at the bottom of this recent markdown phase. And with local resistance sitting between 89k and 90k, made up of the 3-day 200 MA, the 4-hour 200 MA, the significant multi-time frame level 89k and 90k, simply because the price action has been trying to tap it over the last few weeks. So that's local resistance range, and overhead we have major resistance between 94 and 96k, not that dissimilar to where we were last week. But simply speaking, we need to see a strong break below either 84,500 for confirmation of downwards continuation, or we need to see a break of essentially what is 90k for potential upwards continuation. But that's it for now. I'm Paul with ArcisFX. Don't forget to like, subscribe, and drop us a comment. I'll be back on New Year's Day for a special crypto-focused live stream to kick off 2026 with a bang, where you can ask me questions, get me to check out tokens you're thinking of trading, and we'll see, of course, how Bitcoin is doing at the back end of the week. And also, if you're not already in our private group, you can check out the link in the description, as we'd love to have you. But for now, have a good and safe New Year's Eve.